So my name is Joe Boren, and I have been in the environmental business for 50 years or more. 25 was spent in the pure environmental industry, and then 25 years in the environmental insurance business. I'm presently a senior advisor to Synapse Services, what I consider to be the leading wholesale environmental broker in the country. You want the history from when I was born or when I started my career? Probably when I started my career. Well, I had the good fortune of going to school with a guy by the name of Chris Beck, who you would know. And as we were graduating, Chris actually graduated a year before me, he had found this program that was offering fellowships if you agreed to study environmental management. And he said, this is going to be a big field. That was the first time I knew that he could see into the future. And so I applied, went out to the University of Southern California, studied environmental management, and then had a succession of government jobs which were hiring people that had some sort of environmental experience. Ended up at the Connecticut Department of Environmental Protection, where I ran the solid waste unit, which was in charge of landfills. When I left the Connecticut Environmental Agency, I went to the Connecticut Resource Recovery Authority, which was building waste energy plants to take care of all solid waste in the state of Connecticut. And I did that for a couple of years before I went on to one of the largest waste companies in America, where I was in charge of their environmental compliance and their intergovernmental relations, which I did until we got involved in a takeover battle, which was a lot of fun for a young man to be at a takeover battle. I then left after the company was purchased, and I hooked up with my friend Chris Beck as he was doing a leverage buyout of a company that turned into air and water technologies. And in that place, I ran the hazardous waste cleanup part of the company. And I stayed there. Chris engineered the sale of that company to a French conglomerate. And I was thinking about what I would do with the rest of my life when I got a call to see if I wanted to be the president of an environmental firm in the Northeast. And I said, sure, I would be interested in that. And I remember meeting with the headhunter and then being invited to their offices. And the only thing I saw inside their offices were insurance magazines. And so my first question, kind of naively, was, is this about an insurance company? And they said, yes, it is. I said, why would an insurance company want to talk to me? And they said, well, it's about environmental insurance. I said, I got to tell you, I just spent 25 years in the environmental business. I've never heard of environmental insurance. They said that's why they want to talk to somebody who's been in the industry. And so that was my career until I joined AIG in 1996. Well, I have to tell you, as I said, I had never heard of it. So I started to read the things that the company gave me as I was going through the interview process, and I was warming to the idea that this might be sort of the next career move. And I wanted to understand how this business got started. And, it's interesting because this industry ran in parallel with the creation of environmental regulations. So what happened is environmental regulations really started to be written in 1970. Environmental laws, the Clean Air Act, Clean Water Act. The real first environmental episode we had in the United States was in 1947 in Donora, Pennsylvania. And they had what they later came to call an air inversion. Particulate matter from the steel mills and the coal mines got trapped by a warm layer of air and they had an enormous amount of excess deaths than the normal death rate. They started doing studies, and they started figuring out what had happened, and that people were at that time just taking in polluted air. That was in 1947, so it took until 1970 when they wrote the Clean Air Act. But the Clean Air Act started to make people responsible for putting emissions in the atmosphere. And some lawsuits started to develop. And when these lawsuits developed against companies that were polluting the air, the companies went to their insurance carriers and said, I've just been sued for putting pollution in the air. You've written me a general liability policy, and because of that, this is a liability to the company, and you have to pay. And of course, the insurance industry immediately said, whoa, wait a minute. We didn't underwrite for that. And the clients said, well, that's maybe you didn't underwrite for it, but you didn't exclude it. That led to 1972, the first pollution exclusion was written, and it was for sudden and accidental pollution. And that really, as it worked its way through the courts, didn't really protect the insurance carriers. Then 1976 comes, they passed the Resource Conservation and Recovery Act, which is going to trace hazardous waste from their origins to their final disposal, where it's going, who's generating it. Right after 1976, and there's always a seminal event in the environmental business, was the Love Canal. It was a company that Hooker Chemical and Petroleum. Then they sold it to Occidental Petroleum, but there was a canal right next to their property. And they decided, well, this would be a good place to put all of our chemical waste, which they did. Interestingly enough, in 1954, the city of Niagara Falls wanted to take that land. And they went to, now it was Occidental Petroleum owned it, and they said, we want this land, we'll buy it from you. They said, we don't want to sell this land. It should never be used for a public purpose, because we put chemicals in the canal, and even though we covered it over, we're not sure what's going to happen. So Oxy made a deal. They actually, in their contract, put a deed restriction in and said, never use this land for a public purpose, which a few years later, they built a school adjacent to it and put a subdivision right next to it. The drums rusted out. The chemicals that were in there started drifting into the subdivision and into the schools. And we had a cancer cluster in Niagara Falls, unlike we've ever seen. We had protests. We had politicians getting in to the game. And that led directly to the passage of what we call the Superfund legislation. It's called CERCLA, but everybody knows it as Superfund. Superfund really became the impetus to the environmental insurance industry, because Superfund said, if you generated a chemical, if you used a chemical, if you transported a chemical, if you operated the facility where it went to, or if you owned the facility where it went to, you can be held liable. And it had a provision of strict liability, which means any one of those parties could be held responsible for the entire cleanup. Now, the insurance industry then started to get even more claims under their old general liability policies. And they realized that that sudden and accidental provision, the exclusion, wasn't holding in the courts. So they wrote in 1978, 79, the absolute pollution exclusion. And then when they had that, the insurance industry, which had been inundated with billions of dollars of claims. In fact, it was so large that at AIG they had a special unit just to handle legacy claims under the old general liability policies. That a smart guy like Hank Greenberg, who was running AIG at the time, said there's got to be a business here. And he took somebody who was running one of his divisions, a fellow by the name of Dinos Iardona, who later went on to create the Arch Insurance Company, and said to Dinos, I want you to start an environmental unit where we're going to write intentional environmental insurance. Dinos, as he recounted the story to me, said, I don't know anything about that. And Hank said, I read your resume. I know you have a degree in engineering, so just do it. So Dinos Iardona started the business. He had an underwriter, fellow by the name of Paul Kenny, who drafted some of the first policies. And the business started. And it was moving slow. And that brings me back to when I'm being talked to by this headhunter. It was a business that was really small. There were now 3 carriers writing the business. And there were maybe 5 insurance brokers around the country that were selling the insurance. And so when I joined the company, it was with the idea this should be a bigger business. When I started to work at AIG, within the first month or so, we had our first budget meeting with Hank Greenberg. And I remember this as if it was yesterday. He had my budget. He had all his band of wise men sitting on his side giving him advice. And there I was with 2 other fellows talking about the business. And he looked at me, and he looked at the budget. Then he looked at me, and he said, you're going to grow the business 10%? And I said to him, yes. And he said, do you think I hired you to grow this business 10%? So I said, no, but I want to tell you something. What I've learned in the month is that 90% of the business we have here is just one time. We write a policy one time and it expires. So every year when we're building this business, we have to replace 90% of the business before we can grow it. So that's really a lot of new business. To which he said that every single morning he woke up with a lot of problems. And he looked at me and said, and do I call you Joe? So I said, you're right. I'm going to go rethink this budget. And so when I went back to this great team that we had, they were telling me about this product that they were refining, and it was called the Eagle product. And it was a general liability policy that embedded inside the policy environmental coverage. And there were so many people who, and I think the consensus of people was that environmental insurance must be very expensive, so I don't want to get it. But they already bought general liability insurance. So to be able to do that, embed the coverage in it, was something that we would begin to focus on in a great way. And of course, it was a one-year policy that renewed each year, which gave you the ability to build your business out and always have a backlog of business. The other thing that I discovered when I first got there, the company did not have environmental in its name. We were called the Commerce and Industry Insurance Company. And I remember talking to Janet Moylan, who was our vice president of communications, And I said, when my business card says Commerce and Industry Insurance Company on it, as does everybody else who's working here, and it doesn't say anything about environmental. And she said, I've been trying to tell people we need to change the name. I said, what do you want to call it? She said, I think we should be known as AIG Environmental. And we could do that. I said, what's holding it up? She said, nobody's told me to do it. So I said, well, your great idea. Let's do it. Let's call it AIG Environmental. And then we get to the next thing, and that is, how are we going to get more people to sell this product? And I'm glad you mentioned the total pollution exclusion, because after the courts had its way with the absolute pollution exclusion, it had to be refined one more time into the total pollution exclusion, all of which made it so that you had no coverage unless you specifically bought the coverage. We had a great team, and what we needed to do was get more people on the brokerage side to sell insurance, environmental insurance. And there was only one way to do that, and that is to go out and meet them and talk to them and get them to overcome their fears of trying to sell this product. In many instances, we even help them recruit people who would become environmental brokers. So we went from 3 to 5 insurance brokers that were selling environmental insurance to exploding it out across the country. And that's to the credit of the team that was with me and their willingness to go out and be on the road all week long to talk about this. There was one other thing that we also had to do. You have to understand what you're selling. And one of the things about insurance is, and I used to ask this of all the people who work with me, what are we selling? We're selling a promise to pay you. Okay? So who's the promise maker? And they'd say, well, we're the promise maker, right? Well, who's the promise keeper? Well, that would be the claims department. Oh, they keep the promise, and that's what we're selling? Well, let's go out there and tell everybody that. Why don't we also bring the promise keepers with us as we're trying to sell these products? But the thing that you really got to do, and the team was so into this, was go out and meet people. Talk to them about what industries need this, because the answer is almost every industry needs this. And then we would create different products for different industry segments. But it was a total team effort. Nobody can do this alone. Yeah, it was about $100 million when I started there, and it was about $1.2 billion when I left. When I first joined AIG, the premium for the prior year had been about $90 to $100 million, and then over the next 14 years we built it out. And when I left, it was about $1.2 billion in premium. But more importantly, it's like all insurance brokers were selling environmental insurance. And if I look back at what our team created, it was that. We really created a mindset among brokers that they better sell environmental insurance, or somebody else was going to be talking to their client about environmental insurance. And the other thing is, it was easy to build it out at AIG. Well, nothing's ever easy, but AIG was just this massive company, and I was able to take advantage of internally all the resources that the company had, all the other insurance operations who had great standing with clients, and I had a team that was willing to go the extra mile. When I went to Ironshore in January of 2009, after AIG was going through its little crisis, we were going to start an environmental unit. And fortunately, a number of my teammates came with me. But the one thing that I learned almost immediately is that what I did yesterday didn't matter to anybody. What the team did yesterday didn't matter to anyone. Sure, we had some relations, but we were, as one of my friends put it, the new kid on the block, and we needed to prove ourselves. It was easy to write policies because when we were at AIG, that team at AIG had created almost every policy that's in the marketplace. That part was easy. The hard part, and I knew it, was going to be, we got to go on the road. We got to go see our old friends. We got to make new friends. But we're going to refine ourselves a little bit in our message. And what we did was we hired a couple of claims people right away, even though we had not written a policy. And we took the claims people with us to every single meeting that we went to make sure that people understood that we were putting what they were buying first, a claim service, and somebody who could fulfill the promise. And it was slow at first. People gave us a chance because our entire Ironshore team, almost the entire team, had come from AIG, and we had relations with people, so they were willing to give us a chance. And then slowly we started to build out that company. And I think that team did a great job. First, when I started up at AIG, there were 3 carriers writing environmental insurance. By the time I had left, there were probably 20 or 25 carriers. I understand there's maybe 40 or 50 now that sell environmental insurance. One of the things that I've always been pleased to tell people is that most of those companies are run by alumni of AIG. And so that was a good thing, that there wasn't a lot of competition. The downside was not a lot of brokers were selling this, and we had to create that market, if you will, and that team that I was fortunate to lead was able to do that, was able to build that out. The other thing we did, and I should mention this, we didn't limit ourselves at AIG to just insurance brokers. We knew, and I knew, that there were other influences around environmental contamination issues, and that was environmental lawyers, that was private equity guys who were buying companies, and bankers. All were worried about how to make sure their clients were protected. So we made a point of calling on environmental lawyers and M&A lawyers and private equity guys to make sure that they knew these products existed. We just wanted them to have the awareness that they could limit the liability of their clients if they use insurance. We just wanted them to tell the insurance broker for the company, this thing called environmental insurance, we should have some. So that was a good thing. AIG was, as I said, this fantastic company. And so it was easy to take that base, or easier, and build it out. Ironshore was a private equity started insurance company along with so many others. And it was a major difference. It was a slugfest to build that out. I'm happy to say we did it. the environmental unit at AIG was embedded in a property insurance carrier. And the gentleman who was running it had no environmental background, and it was very hard for him to manage that business and grow that business. He didn't understand the environmental business. And there was this occasion where there was this enormous fire in Massachusetts called Malden Mills. And when AIG learned how much insurance they had put up for Malden Mills and that they had lacked getting reinsurance and that there were environmental exposures that would be covered, that caused the management at AIG to start thinking they wanted to change things, which led to my entering the company.